येष सुप्तेषु जाग्रति येष सुप्तेषु जाग्रति कामं 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 निर्मिमाणः निर्मिमाणः तदेव शुक्रं प्रदब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः सर्वे तदूनाद्यपि कश्चन एतद्वैत 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 एतद्वैत.
Friends, at outside, on behalf of Annanagar CP Study Circle of SIRC of ICAI, I am yours Hemant Kumar, convener for Annanagar CP Circle, along with my deputy convener, Bashikar Ji. Welcome to all, and outside a small technical delay. So it's a glad for me to introduce for you the day for the session on trust and taxation and recent issues related to that. It's my privilege and very happy to introduce our great speaker today, Dr. C.A. Falguna Kumar Ji, fellow member of ICAI, practicing as a chartered accountant at Tirupati since 1979 for the past 41 years as a managing partner of E. Falguna Kumar & Co. His age is about 65 years, but he will not look like, he will always look like 25 years. He's married to Srimati Vijayalakshmi Garu, who is the doctorate in home science and worked as a principal at TTD College. They are blessed with 2 children, son and daughter. Both are chartered accountant and both are working with them as a partners of our firm. His educational qualifications: MA, MCom, MBA, BL, DISA, PhD. Is a member of the Institute of Company Secretaries also. He got recently qualified in the Independent Director Eligibility Test of IRCA. It shows that his curiosity of learning the knowledge and updating is day to day. So we have a big list, and we already have enough time to take it up with a small introduction. So if you want to take taste alwa, you have to go for Tirunelveli. If you want laddu, you have to go for Tirupati. Under the lotus feet of the Lord Balaji, sir, having the blessings of to serve that one of the biggest trust of world, Tirumala Tirupati Devasthanam, last 30 plus years and serving still. So much great introduction, our past chairman of SIRC, and I request Sri Falgun Kumar Ji, thank you very much for accepting this wonderful evening and kindly educate us on trust and taxation related and recent related issues, sir. Straight away over to you, sir. Thank you very much and warm welcome to all.
Thank you, Hemant Kumar, for giving me this opportunity. I'm sorry somehow this delay has taken place. Now I have to share my PPT.
Yes, sir. Go ahead, sir.
So
straight away you can go ahead, sir.
One minute. Is there? So share the screen.
Yeah.
When I share the screen, this share. Okay.
Yes, sir.
Yes, please. View full screen. Are you able to get
slideshow? Yeah. Yes, sir. Go ahead, sir.
Slideshow from the beginning.
Slideshow.
Okay.
Great, sir. Go ahead, sir.
Okay. So this taxation of trust, as we all know, right from the Income Tax Act learning, maybe in the CA Inter, we will be knowing that the intention of the government is to give to public charitable trusts or public religious trusts the full tax exemption. That means the beneficiaries are not identified persons, the public at large, unidentified persons are the beneficiaries. With that intention, if a trust is created, the objects must specify whether they are for religious or charitable. Earlier, mixed objects used to be there, but the Income Tax Act of late has made some distinction between a religious trust and a charitable trust. Why? Because anonymous donations are not specifically taxable at a special rate in the case of religious trusts, whereas anonymous donations are taxable. Anonymous means without the identity of the person of the donor. If some money is received by a public trust, if it is a charitable trust, it is taxable under section 115 BBC at the rate of 30%. Of course, this marginal limit is there, either 5% or 1 lakh rupees, whichever is higher of the total donation. So the distinction between the religious and charitable trusts are two types, not only these anonymous donations. The activities, strictly charitable trust activities, must restrict to the written objectives. We are having in the Income Tax Act, section 215, the charitable purpose definition. Charitable purpose includes, it's an inclusive definition, education, medical relief, relief to poor, preservation of environment, protection of architectural things, advancement, yoga, and advancement of another object of public utility. So this last limb of this charitable purpose encompasses several of the activities which is not falling in the above 6, the 7th residuary class, subclass in this charitable purpose, advancement of another object of public utility, normally like literature promotion, dance promotion, music promotion, sports promotion, like that. You take up any other thing which is not falling in the above, like education, medical relief, relief to poor, like that. So this advancement of another object of public utility from 2008, the definition of this charitable purpose has also undergone 3 provisos. Those provisos say, in case of any activity in the nature of advancement of another object of public utility, if there is a fee, cess, or any other amount of receipt for the services, for sale or goods or services, then such receipts, if they exceed 20% of the total gross receipts of
Sir,
the...
sorry to interrupt you. You can change the slide, sir.
Okay, okay. So the charitable purpose definition that has undergone is a very, very serious amendment from 2008. What I mean to say, the provisos say if there is a trade, business, or commercial activity nature which amounts to receipt of some money, then the trust shall not be considered as a public charitable trust, or say the purpose is not charitable purpose. So we have a 12-year registration. Once such receipts are there, more than 20%, generally in education trust, if it is purely education trust, no problem. Along with education trust, it has got some other activity. Some other activity means some publishing of books and literature. So this is not related to education, say some other magazine, maybe for society benefit. This educational trust is for printing a book, monthly, weekly magazine and selling. Then such sales exceed the 20% of the total receipts of that organization, the trust. Then the total trust loses the term, though they have a 12-year registration, the total trust loses its section 11 exemption eligibility. So this is a very dangerous thing. So many of the things, actually, for your information, even CA Institute, which was enjoying the exemption as a charitable purpose under 1023C4 was denied. I'm citing in my PPT those case laws also in favor of CA Institute. So the officer immediately tends to say, CA Institute, yours is public charitable purpose all along. Now because of this amendment, I am looking into your income and expenditure account. Your gross receipts, coaching fees for the students, coaching fees, it exceeds more than 20%. So you are not going to be considered as a charitable. So why can't I deny that? So like this, number of institutions, for example, in Kerala, a church, in the church income and expenditure account, the income side, around 70% receipts are from the shops let out. The church has constructed the shops around the church. Church is in the middle of that area, let us say in a particular area. Because the church is abutting the road, to receive some income, it has constructed the shops and let out. So seeing the income and expenditure, the assessing officer will say, has said, not say, a live case I am giving you. So you will say, your income and expenditure, major receipts are from commercial establishment shops. So you are existing for promotion of commercial establishment. So you are no longer a public. Section 11 exemption is not there. So the argument is, you don't look into my income side only, see my expenditure side. My expenditure is 75%, 80% is only for promotion of religion. I am a religious trust. This amendment is only for charitable purpose, not for religious institutions. So the definition of charitable purpose amendment cannot be applied for a religious institution. So religion means, then what is the religious purpose of religious? The object is promotion of a faith in a particular religion. The expenditure part you see, I have incurred my expenditure only for the promotion of religion. So thereby we could succeed. So the trust taxation, right from the definition of charitable purpose 215 to section 10 exemptions for these trusts. Actually, I must tell you, the word trust only is used in the Income Tax Act rather than society or a section 8 company. So it goes to say the sections 11, 12, 13 continuously uses the word either a trust or institution. They didn't use the word person. Similarly, section 1023C, biggest section, the 18 provisos. So this 1023C is also having 8 subclasses. 1023 small 3a, small 3ab, small 3ac. So small 3AD, AE, and then 1023 small 4, small 5, 1026, and 6A. So these subsections are having some difference, and we'll come to know of it. So the basic structure of the Income Tax Act, intention of the legislature is to give exemption for non-profit organizations like public religious trust like TTD or any temple for that matter, church, mosque, or educational institutions which are for promotion of education without profit motive. So most of the engineering colleges, degree colleges, because the government gives accreditation or say recognition for a non-profit motive public trust registered or a society or a section 8 company. For example, TTD is having SV Bhakti channel, SVBC. It is a section 8 company. So to promote the religion, unless it is registered as a company, corporate body, the central government, Ministry of Information and Broadcasting will not give a recognition to have its own channel. Only for a corporate body, it will give a permission. So they promoted section 8 company. You will find number of, for example, CA Institute is having a research institute, section 8 company. So CA Institute, though it is a created, Parliament created the Act, CA Act, CA Institute has created a Section 8 company. So like that, we can have either a society or a trust or a Section 8 company to achieve this purpose of public religious activity or a public charitable activity. Now, there is a small difference between public trusts, which necessarily are going to be non-profit motive. There are other types of non-profit motive entities like a trade union, a provident fund trust, a gratuity trust, or urban development authorities created by the government. Now almost you are having more than 100 smart cities. So the government, central government promotes urban development authorities like Port Authority, Airport Authority of India, or Port Trust. So like that you will have a number of entities which are non-profit motive, including cooperative societies. For example, in a big apartment building, the RERA Act says the builder must hand over the common areas to the residents association. So these are all the several types of non-profit organizations which you should distinguish. Though they are non-profit organizations, they are not public trusts. Non-profit motive may be the commonality between all these things, but all non-profit organizations are not public trusts. But public trusts must be non-profit organizations. So you are having some special exemptions under Section 10, trade unions, 1024, local authorities like municipality, panchayati, 1020. So tea board, coffee board, like that special exemption. Similarly, this Provident Fund Trust, Section 1025, Provident Fund, Gratuity Fund, Superannuation Fund. So these are all because Provident Fund means a particular company or an entity or organization, business organization, for the benefit of its employees, creates a Provident Fund Trust. So the Provident Fund Trust is for the benefit of identified employees of that organization. Maybe
sorry to interrupt again, sir. Change the slide, sir.
1 minute. This slide I am now explaining. After the complete of this slide.
Okay.
Okay, no problem. So this Provident Fund Trust is not a public trust. That's why there is a separate section under Section 10, 1025. So if you want to for Provident Fund Trust exemption, because the trust pulls up the employer's contribution, employee's contribution, the money is deposited in the bank. The income is the income of the Provident Fund Trust. So unless it is a recognized Provident Fund, that means you must apply to the commissioner, not under Section 12A registration, not the income exemption under Section 11. It should be under Section 1025. Only if the commissioner grants the registration, having the jurisdiction for this Provident Fund Trust, the income is exempt. So like that, this distinction between the normal things and public trust. For example, you commonly what we see physically, Cosmopolitan Club, McLean's Club, or some other club. So the social clubs are all coming under principle of mutuality, because the club is formed under the registered under the Societies Act. It is working for the benefit of the members only. So then it is not a public trust, though it is non-profit motive. The principle of mutuality will apply to those social clubs. So the principle of mutuality, there is no specific section in the Income Tax Act because of the jurisprudence in the courts have time and again held the principle of mutuality. There is no income, though it may receive from the members membership fees, annual membership fees, then spent for its members. For example, Rotary Club. So the Rotary Club objective is to collect from the members the money and then conduct every week a meeting, say Wednesday, Thursday, and do some public activity. So this is the principle of mutuality. This is upheld under GST also. Latest edition of the Supreme Court is also there. Principle of mutuality will apply not only in the Income Tax Act, under the GST Act also. Then the club, what it is doing, collecting from the members, need not be subjected to GST. A very sensational judgment under the GST also, on the based on the principles of same Income Tax Act also. Its income, though we audit and say this is registered on the society, income and expenditure balance sheet you audit, you will find some surplus, but that surplus is not income under the Income Tax Act. So similarly, consumers cooperative stores, a limited company is there, for example, its employees form a cooperative stores. So its employees, they start a cooperative stores only for the benefit of buying the goods in the wholesale with a very nominal say margin like 2% for administrative expenses. It sells to the members of that cooperative society. No outsider they can purchase it, only members purchase it. So the members purchase and ultimately it ends up with some surplus. That surplus is not taxable based on the principle of mutuality. So please be careful. Cooperative societies, consumers cooperative societies, principle of mutuality will apply. Maybe a cooperative society, producers cooperative society, no question of principle of mutuality, because the income is derived from sale of goods or services to outsiders. Say for example, the cooperative textiles is their co-op tax. These weavers are the members of the cooperative society. They produce the goods, they sell to outsiders. Then the principle of mutuality will not. So like this, you are having a last line, trade associations, professional associations. For example, bar association, advocates, say retail rice merchants association, or cloth merchants association, or lorry owners association. So the trade professional associations principle of mutuality will apply if they are only for the serving of the members, but there they said any specific services to their members which is related to the trade or profession. 2813, the business guide charging section specifically says it is a business income. Then to which extent the losses can be set off in the same business, 44A is there. So specific exemption is there under section 1023A. So this is the general view of overall non-profit organizations, how different types of non-profit organizations can be there, in which public trust, which we are going to spend much time, that is the charitable purpose definition, educational institutions, or other than charitable purpose, religious institution, because the section 11, 12, 13, both for religious institutions and for charitable institutions, these three sections will apply. Though these three sections are very small in number, the implication is huge. So what is that implication? What are all the important things that we will see? So the section 10 exemption versus section 11 exemption, the freedom is given to the institution to go and opt for section 10 exemption or section 11 exemption. Conditions will apply. For example, section 11 exemption means it is necessary the institution must have the 12AA registration. From October 1st, the 12AA is going to be replaced by, already Parliament has passed the act, only the effective date, which was June 1st, 2020, is now postponed to October 1st, 2020. So to avail section 11 exemption, at present 12AA registration is must. From 1/10/2020, 12AB, a new section is introduced. There is slight difference that in last but one slide today we are going to see. So section 11 exemption means a registration is necessary either for a religious institution or for a charitable institution or for mixed objectives, but I don't advise you now to register with mixed objectives like religious come charitable institution. Don't do that. So objects writing itself needs a lot of thinking. Many people just cut, copy, paste somebody's objectives, they see, they copy and then try to register, which is going to land them in troubles. So your specific objectives 4 or 5, maximum 6 objectives you have, that much only you register. While registering also, you must be very careful in drafting the bylaws, because the Income Tax Act expects some necessary clauses like operations within India, like the financial year April 1st to March 31st, auditing by chartered accountant, so winding up clause, amendments clause, with the prior permission of the commission for having jurisdiction. So like that, specific objectives, specific conditions you have to satisfy while drafting, then only they will give. Otherwise, when you apply, your clauses are not there, necessary clauses, you amend and then come back, then we'll consider. That's what we say. So before registration itself, are you going to claim section 10 exemption or section 11 exemption? You should choose. As on this date, you can choose both also. You can have 12A registration and 1023C registration also. Under section 10, some unconditional exemptions are there, and registration is a condition. This is actually the word used in 1023C is the approval, whereas 12A is a registration. So either you can have 12A registration and enjoy section 11 exemption. Section 11 exemption is also with some conditions. For example, your gross income 85% you should apply in the same year. If there is a shortfall deemed application, you should file Form 10 or Form 9A. Section 11(1) explanation 2, Form 9A, or Section 11 subsection 2, Form 10. So that distinction also we are going to see. Similarly, Section 1023C approval also you can have. For example, an engineering college, you can have both 1023C small 6, above 1 crore gross receipts educational institutions, unless they have 1023C 6. Under Section 10, they cannot claim exemption. Why? Because under Section 1023C small 3AD, below 1 crore educational institutions can have, without any registration, any approval, they can automatically claim. Like every street corner, if you find a school, a primary school, or a small high school, where the gross receipts are less than 1 crore, without anything, either a medical institution or an educational institution, you can have this small 1023 small 3AD or AE, this. Similarly, other type of without registration Section 10 exemption is small 3AB for education institutions like universities. We all know government finances the universities. We are having a higher education comes in the central government subject. So primary education comes in the state government subject. So the central government UGC, it has constituted and grants, it releases. So those grants through the state government comes to those universities if it is a state government promoted university. Central government also promotes universities throughout the country. So these universities where 51% or more of their gross receipts are from the government by way of grants. So it's government financed universities, government financed educational institutions without any registration or approval under 1023 small 3AB can claim exemption of its total income. So this is how the difference between Section 10 exemption and Section 11 exemption, because both for Section 10 exemption claiming or Section 11 exemption claiming, you will have to use the return of income ITR 7. When you go to ITR 7, it asks you specifically, you are saying you are entitled to exemption. Under which section? Do you have registration? Registration under Income Tax Act do you have? Do you have registration under any other act? If you have audited the books of accounts, under which act? Under Income Tax Act have you audited? Under the other act also have you audited? So it asks, ITR 7 asks all these things. The registration and promotion, or say the administration management of these institutions is one thing. After finalizing the accounts, filing the correct ITR, filling up the, that is ITR 7, and then filling up the correct columns needs a lot of attention, seriousness. Just like that you cannot file. So this is the primary difference between Section 10 and Section 11 exemption. So from 1/10/2020, the present Finance Act, this 2020 Finance Act has said, you cannot have both Section 1023 approval and Section 12A registration. you must have only one. Hitherto, people used to have both the things and file the returns. Now it is restricting, and hitherto, once a person gets under 1020 or 12A, it is a permanent, no question of renewal. Now hereafter, for the existing people also, existing trusts also, the registration is deemed to have been stopped. That means withdrawn. And then unless within 3 months from the new section coming into operation, that is for October 1st, means before December 31st, 2020, existing institutions also, trusts also must apply for renewal. For already registered ones, they give the renewal for 5 years. If it is a fresh registration, only a provisional registration for 3 years they are going to give. And within the 3 years, when the operations are commenced within 6 months, they must go for permanent registration. So the change is there between the section 10 and section 11. So one must be careful. If there is applicability of a registration is there, that means above 1 crore gross receipts for education, you are not having 12A, then you cannot file ITR 7 because exemption is not there. Then come to ITR 5 for AOP, then it becomes an association of persons, unrecognized trust. So then ITR 7 is not there, ITR 5 comes. So what is the difference between ITR 7 and ITR 5? In ITR 7, once you have a 12A registration, the computation is as per section 11 only. Section 11 is a separate code by itself. The 5 heads of normal computation is not applicable for 12A registered section 11 exemption claimed institution. If once you are not having 12A registration, income must be computed as per 5 heads. Under those 5 heads only, you must fill up the return in ITR 5. So once you are not having 12A registration, income must be computed as per 5 heads like capital gains, house property, other source income. Whereas if you have 12A registration, even if property is sold, capital gains computation will not apply. Section 11, subsection 1, capital A. That section deals with the sale, capital sale receipt, how to use it, how to claim exemption under section 11. That section deals. So this with computing the income is a separate code by itself under section 11 if registration is there. Similarly, same thing will apply to 1023C also, with several provisos being the conditions. So the income computation is separate under 1023C. If you don't have that approved under 1023C or under section 11 exemption, then you must go for ITR 5 and a normal computation you should do and pay the tax mostly under maximum marginal rate you have to pay if you are filing ITR 5. So this is how now up to 31/3/2017, number of decisions have come even without 12A registration. The income word only for revenue income, for capital receipts, no question of taxability under the Income Tax Act. Because Income Tax Act, the word income is defined under 224. So the 224 income should be a normal income, real income. For example, somebody newly constituted a temple trust and he donated his 5 acres land to the temple. So up to 31/3/17, that land cost, market value or at which he has given it is not taxable in the hands of the temple trust, though it is not registered under section 12A. Whereas now after 1/4/17 from 18/19 assessment year, 56/210, the 56/27 is substituted by 56/210. As we all know, the other sources head. Earlier, the other sources head to a limited extent for individuals, HUFs, partnership firms, limited companies was applicable. Whereas now the 56/210, any person receiving without any consideration. So this 56/210 is now applicable for unregistered trust, unrecognized trust, AOPs, anyone who receives something either in cash or in kind. So the 56(2)(10) makes taxable all the receipts if you are not having 12A registration. Normally, people donate jewelry to the god, temples without any 12A registration. People try to manage the temples. So the income tax department may not be having sufficient personnel to go to each and every temple and say, well, are you maintaining accounts, are you having 12A? But in case through their bank account or through some other thing, if they come to know that it is not having 12A, all its capital receipts also are taxable. So the necessity of registering is now very high. Unlike the earlier days, now all the revenue receipts and capital receipts are fully taxable. So now there was an amendment in section 11, subsection 7. They say even if you have 12A registration, under section 10, in addition to section 11 exemption, under section 10, 10(1) agriculture income and 1023C, only these two sections you can claim. The remaining you cannot claim exemption. What they were doing, dividends under 1034 or sale of shares 1038, listed company shares. So some exemptions under section 10 also people used to claim for these trusts which are having, thereby that income 85% they are not going to apply. So seeing that amendment has come, so seeing that if you once have a 12A registration under section 10, only 10(1) agriculture income and 1023C you can claim, other sections you cannot claim. Similarly, 12A registration is now a little bit say stringent in the sense, if you violate any other law, not the Income Tax Act, if you have violated any other law which is in achieving your main objectives, for example, education institution, state government says from the students you cannot take the fees beyond a particular limit, maximum limit is prescribed. So now if the state government law is violated by such a education institution, Income Tax Act says 12A registration can be refused because you have already violated something. So this is the amendment. So one must be very careful. Similarly, while applying for 12A also, they will ask you, what is your fee structure? Have you violated any other law? Maybe for objectives only this is applicable, as the specifically amendment says. The school bus would have gone in opposite direction in a one way, would have paid 200 rupees penalty. That is not a violation of the objective. It's only a procedural thing. There may be delay in provident fund remittance, or there may be some other thing. So they are not going to affect in the achieving the objectives. If you have violated any other law, then under the Income Tax Act, already given 12A can be cancelled, or fresh registration can be refused. Similarly, the objectives, once you register with the Income Tax Commissioner, you cannot change on your own. Whenever you want to modify, whenever you want to alter, whenever you want to replace and substitute something, unless a prior permission is taken, or within 30 days of that objective modification, a fresh registration application is applied and obtained, the old registration is deemed to have been cancelled. So many of these charitable institutions, without the knowledge of the auditor, they take up a new objective. They donate to somebody else which is not there in your objective. Even if they donate to governor or say chief minister. So is the donation giving is the power within you, because it goes to relief to poor. You may have purely education only. So relief to poor is not an objective for you. In the Income Tax Act definition, it may be there. But any objective, any activity which is not your objective, if you take up, you are going to lose your section 11 exemption. So, and now the amendment is 12A registration also they can cancel once you meddle with the objectives. So one must be careful. Now, the 2014, there is a amendment to section 12 capital A2 while getting the registration fresh, if you are not already having a 12A registration, if you apply for a fresh registration, you have to file Form 10A along with, if it is existing for more than 3 years, last 3 years audited accounts only, no need to file the returns of income. So if you file the audit reports, that is sufficient with the financial statements, maybe in Form 10B, 10BB you file as if you are having Section 11 exemption and apply for 12A registration. Once you get 12A registration, the three provisos that are added to 12 capital A to say that once you get now 12A registration, earlier 6 years, the assessing officer is not entitled to reopen even under Section 147 by giving notice under Section 148. So that means the exemption is deemed to have been granted applicable for earlier years also. So now if you comply the registration and for earlier years also, you have spent more than 85% and your money is there only as per Section 11(5) in the nationalized banks or post office like that. So the conditions as if it's a public charitable trust, you have complied without only a registration. Now you have applied. So for early release also, that means the old ratification of from a backdate power was there for commissioner, that was removed. But now the act itself says if you want to comply, that means they want all the public charitable religious institutions to fall in line with a fresh registration. Thereby the immunity is given. One should note this and avail this from 2014 the amendment. So these are all the decisions also that no need to file the returns. In fact, number of decisions have come. I have also represented and got like that on these lines. So this now religion includes charity. Charity doesn't include religion. As I said, charitable purpose is strict definition. Whereas religion, there is no strict definition, no definition in the Income Tax Act. So there are a number of cases which say, if you are having the religious objective coupled with some charitable objectives, the department cannot refuse saying that yours is a charitable institution, you are for a particular community. I gave you the decision, Dawoodi Bohra Jamaat. Both in Chennai, there is a Tamil Nadu related Dawoodi Bohra Jamaat. At the bottom, 2016 decision, and the 2009 decision, this is the Supreme Court decision also is there. 2009, other Madhya Pradesh High Court, and then Supreme Court in 2014 has given the landmark judgment, which says the Muslim community, there is a particular sect known as Dawoodi Bohra Jamaat. So, as per Quran, a Muslim is supposed to do some charity for public. So every religion says like that. The Quran also said, for poor people you try to donate, give some food on the Ramjan day, on year income 6% of your every year additional incremental income, 6% you please donate. Quran specifies all these charitable things. So based on this, department said yours is a charitable purpose, Section 13(1)(b) for a particular sect you are doing, so why can't we refuse the registration itself? So Section 11 exemption you are not entitled. Ultimately, the Supreme Court, both the High Courts and Supreme Courts have said religion includes charity. Religion means giving food or say money. In Muslim religion, money lending is prohibited. So free money lending, interest-free money lending is permitted. So they are having such clause for poor people, I must lend money without interest. So all these charitable activities are part of religion. Thereby it is a religious institution. It is entitled to registration. So one must know this. Then trade, commerce, business, already I explained you the Institute of Chartered Accountants of India cases as I have mentioned earlier. Say for example, ICA Accounting and Research Foundation. So it is not because Section 8 company, it doesn't mean that it is a commerce oriented company, because CA Institute Section 8 company promotes accounting, double entry bookkeeping for government organizations. So the Research Foundation undertakes on a commercial basis, in the sense that for your total conversion of your single entry into double entry, give me 20 lakhs, I will convert. So the railways double entry bookkeeping system. So all these things the CA Institute takes up. It doesn't mean it is a commercial activity. It's all only for promotion of the compliance of law. So for promotion of this profession and the accounting standards, or say the accounting knowledge, proper systematic accounting knowledge, the Section 8 company or the institute itself is working. It cannot say that because merely coaching classes fees is there or campus selection fees is there, it is a commercial activity. So exemption or registration denying or exemption denying cannot be done. These are all the decisions. So similarly, a Goshala, the cows preservation. So the Goshala sells the milk. So selling milk is a commercial activity. So why can't we deny the registration or say exemption? So the courts say it is incidental. Actually, both in the Income Tax Act, GST, in many other laws, what is the main objective, spirit of the promotion, spirit while promoting this institution? What is the main spirit that you see? The Income Tax Department may not be able to see only through figures. They see some other thing narrowly. The courts say broad objective, main objective you should see, not the incidental activities. So thereby cow protection is there, any animal protection is there in the constitution, Indian constitution. So animal preservation and protection is environment, a part of environment. So while protecting the cows, the milk is incidental, and the milk, excess milk selling is also incidental. It's not a commercial activity. Based on that, you cannot say it's not a charitable purpose. So dominant purpose has to be looked into. So the incomes to be, now I am coming to your registration part is over. You are entitled to registration. But how to calculate the or compute the income, calculate the income that is exempt. That's how we have to see. The second part we are coming slowly. So the income side, you should examine into 4 types of incomes normally. So 4 baskets. What is the income for main activity? What is the income related to advancement of another object of utility? Are there any receipts for sale of assets? Are there any receipts towards corpus fund donations, specific donations? So if the donor gives a direction to use his money in a particular way, then it is a specific donation, otherwise known as normally corpus fund donation. So similarly, are there anonymous donations permitted only for religious institutions? Charitable institution can have, but it must pay 30% tax, subject to that small exemption threshold limit given in section 115 BC. So either for religious institution or for charitable institution, incidental business receipts can be there. For example, an educational institution, it is running hostels also. College is education. Hostel, is it part of education? Definitely it is incidental activity to continue the main activity. Without hostel, students will not join. Girls, for example, parents will not admit their girls unless there is an attached hostel in that college. So the hostel is mainly non-profit motive, or if some nominal surplus is there, that surplus is also going to be used for education only. So if consistently a hostel gives surplus, it is an incidental business. Business, there is no hard and fast rule. If consistently surplus income is generated, then it is business. If no loss, no profit, if consistently loss is there, then it is not a business. Either printing of books, running a hostel, running the buses. So private buses taken on lease, you are collecting bus charges. If some surplus is there consistently 1 or 2 years, then it is a separate business activity. You must maintain. For example, in a hospital, pharmacy is a must, because the patients must buy the medicines immediately. Instantly they must buy the medicine and administer the medicine to survive the patient. So the pharmacy definitely is a business. Why? Because they buy the medicines, they sell the medicines, maybe without profit motive, administration expenses sake, 2% margin we keep. But the 2% margin itself is a profit. You must maintain separate set of books of accounts. Then alone you can claim section 11 exemption or 1020C exemption. So the income side, you must separately keep in several baskets, so that while computing the income, taxable income, or what is 85% to be applied, unless you have this classification of income, you cannot compute the correct income to fill up ultimately the ITR 7 and claim the correct section 11 exemption. Otherwise, a demand notice will come from the CPC. So after filing the return, most of the cases, hundreds and thousands of cases. In fact, CPC itself gave a PPT presentation. They said some 1,500 crores is their demand only because of the wrong filing of ITR 7. They themselves have given in writing. So the expenditure side, how to be examined? As I said, income side you should have separate baskets. Expenditure side also, your in fact your R&P, receipts and payment account of a public charitable institution or religious institution, you have separate horizontal lines. Your receipts and payment account is a vertical. You have horizontal lines. That is both income side and expenditure side. Then only you can properly relate income side to the expenditure side and then fill up the ITR 7 and claim the correct exemption. So the expenditure to be examined is segregate revenue expenditure from capital expenditure. Normally in the receipts and payment account both will be there, but the income and expenditure and revenue expenditure only. Balance sheet you will find capital expenditure or the normally fixed asset sheet. So both revenue expenditure and capital expenditure must be for the objectives. That means, as I said, a church is there. A church has constructed the shops. Can you say the shops construction expenditure is for religion? No. So the shops construction expenditure is not objects oriented. For example, a college, engineering college is there. So it constructs the shops roadside. You cannot say that capital expenditure is for objectives and then claim exemption. So the capital expenditure also should be for objectives. Revenue expenditure is also for objectives. Then only it is considered as application. The word section 11 used is your income 85% must be applied. The word applied includes both revenue expenditure and capital expenditure. So the capital expenditure and revenue expenditure must be for the objectives. There may be some administrative expenditure. That administrative expenditure separately you compute and also claim as application, because without administrative expenditure you cannot achieve your objectives. So in the ITR 7 it asks you what is administrative expenditure, what is the expenditure for your objectives, it asks you. Similarly, the income side also, what is for objects you receive, like school fees, college fees. What is the other receipt, revenue receipt, like bank FD receipt income. Bank FD income is not for main objectives, it is only incidental. So you must segregate this. Similarly, in the expenditure side, payments to the related parties. So 13(1)(c) declaration they take every year. 13(1)(c) means there is a section 13(3), 13 subsection 3, who are all the related parties like thing. So for those specified persons, if any payments are made in the nature of expenditure, so then you must specify, just like your tax audit 40 capital A2, here also related party transactions you must specify. Then only you will be able to, it is the Income Tax Act 11, 12, 13 is not prohibiting totally those related party transactions. You can incur, but it should be at arm's length. For example, a wife and husband, teachers, they start one school, so they get solely registration. In their own building, let out to the society, they are running this public charitable society, educational society. So this building rent, if it is reasonable, definitely it is allowable as application. If it is not reasonable, definitely that is not going to be considered, and section 11 exemption itself is going to get affected. So the related party transactions, you must be very careful. You must specify. In form 10B also it asks you, are there transactions? It's not saying are there unreasonable and excess, because section 40 capital A2, unreasonable and excess expenditure to the related persons can be disallowed by the ITO. Here, without using those words unreasonable or excessive, it simply says what are the transactions with the related parties. In 10B, we have to specify. Most of the people are not specifying, thereby ultimately giving a wrong audit report, 271F. So please, this correct audit report, correct transactions reflecting, you must take a declaration from the party, who are all the related persons, what are all the payments. Maybe the executive members are owning the buses, they let out the buses to lease out the buses to the society. So unless you probe into it, unless you correctly reflect, it may ultimately damage the Section 11 exemption. Donation to other trusts. Actually, yours is an education institution. You got some surplus. From your current income to the other similar objective institution having 12A registration, if you donate for its revenue, that means a normal donation, if you give, it is an application. For its corpus fund, if you give donation, for you, it is not an application. The donor, it will not be considered as application if the donation is given as a corpus fund donation. So from 1920 assessment year, the business had disallowance sections, 40 capital A3, 10,000 rupees more cash expenditure, 40 AIA, any expenditure without TDS. If the TDS provisions are applicable, you must subject them to TDS provisions. Without TDS provisions, if you apply, if you make the payment, then mutatis mutandis, these two sections are imported into section 11 to calculate the income applied. That means if you are a capital expenditure or revenue expenditure, if you incur in cash, that will not be considered as application. And 40A also, if you are without TDS, if you incur any expenditure, it will not be considered as application. So similarly, earlier years loans repaid in the current year. So these are all the section 11, 12, 13. Section 11, 12, 13 is mostly the Income Tax Act has given minimum meaning and elaboration. The courts have elaborated them very extensively. The courts said, as I said, section 11 application word includes revenue expenditure capital. It is the court's interpretation, which the department has accepted. Similarly, in the early year, for example, an engineering college in the very first year, with a bank loan, construct the buildings. Say, for example, 60 lakhs total project cost. 50 lakhs it borrowed from the bank. With 50 lakhs, it constructed the building. So this 50 lakhs is not from income. In the year you constructed the building, you cannot claim the building as applicable because there is no income at all. It is a loss. First year, only 1 year students will be there, first year student. So you have no income, so you cannot claim building cost. Loan is not income. Okay. Subsequent years, when you get surplus income, you repaid the loan, building loan. That building loan repayment is also an application. Courts held it and the department has accepted it. So this is how the payment side, expenditure and payment side, you have to examine what I said. So any specific caste or community, have you incurred any expenditure? Please examine. This is how the expenditure side you should examine. So the objects clause adoption or modification, already I have explained you that before the amendment it was not that serious. Case law may be there, but now after amendment from 1417, within 30 days of a change, that is the adoption or modification. Modification means intentionally you change. Adoption means without any resolution, you move object, you spend the money, you incurred something. Then within 30 days, unless you apply for fresh registration, old registration is deemed to have been cancelled. So this is what. Sometimes courts gives permission. Even for courts giving permission, we should intimate saying that because the court has given for change of objectives, you please allow me to do it. They definitely department will. So that is the meaning of the word adoption and modification. 115 TD is there, which is a very, very serious section. Majority of us are not aware because it has not been applied. So by chance the 12A registration is cancelled or it is not entitled to have 12A registration, it wound up its activity by transferring its properties to some other institution which is not having similar objectives. So in all such cases, the net assets market value, net assets, the gross assets market value, fair market value, minus the third party liabilities will be considered as accreted income of that year. I will give simple example. A 20 years old college is there, a 100 years old church is there. Its land, Britishers would have before independence granted the land freely to the church. to a hospital, to a school. So a Good Shepherd school. So in a card, 100 years old. So the land would have been given by the then government. So now if you violate having 12AA, if you violate the provisions of 12AA, and if your registration is going to be cancelled, on the fair market value of those assets, it will be 100 times, 50 times more, less the third party liabilities, any bank loan, etc. So the remaining is accrued income. On that accrued income, 30% tax has to be paid by because of the sin of availing the 12A registration all these years, complying the law. Present management has committed the mistake of not complying 12AA. For all these years income exemption, now it is going to become taxable income. This is the law. So you please try to understand this severity and stringent provisions of this 115 TD. 115 TE is for the payment of that 115 TD tax. Interest also has to be paid at the rate of 1%. And then 115 TF, the trustees are deemed to be the assessees. If the trustee is not paying the tax, trustees from their personal property have to pay the tax. So please be careful in lending your name to a temple or a trust. Try to comply, just like our independent directors in a limited company. So lending the name also catches some liability. So then what is income application? I have already explained you because of lack of time. Many important things are there. I will rush through quickly. Last 15 minutes is there for a question answer. All your doubts to the extent possible I will try to clear. So the income, what is meant by income? If corpus fund donations are kept in FDs, the interest is also a taxable income only. The gross income you have to consider that as a gross income. So generally the administration expense also is application. I have given you the revenue expenditure for the objects is an application. So the capital expenditure for objects also is an application. If a business is there, some 1956 before business means the main activity is business 11.4. Any incidental business 11.4A. So now for the present trust mostly 11.4A will apply. So separate set of books of maintenance and complying the business provisions is necessary. There should not be any disturbances. So business incidental. So buildings let out is not a business, it is only incidental let out. For example, a school, college, auditorium, if you let out to public or other educational institution or public for marriage, for some other ceremony, it's only incidental, it is not a business. So you can claim, these are all the case laws, number of decisions are there. So the depreciation claiming is the amendment, section 11.6. It says, because the original cost of the capital expenditure being claimed as application, on such capital expenditure, the assets, once again depreciation is prohibited from 15-16 assessment year. Up to 14-15 it was not a double deduction. Courts held a number of decisions, but now Act has been amended, so the decisions are not applicable. So only from the amended year, this is a not retrospective. That is the 2018 decision I have given you, where it held that the amendment is only not retrospective, prospective only. So the practical aspect is those assets whose cost you have claimed earlier, though for accounting purpose you calculate the depreciation, charge the depreciation to the income and expenditure account to get the true and fair view of the balance sheet. But to an extent, the depreciation don't claim as application. Whereas on those assets whose cost you have claimed, you are not claimed the cost as application. You want to claim depreciation only. Then only claim depreciation, don't claim the original cost. Even now, in the current year or say from 15-16 assessment year, if a new asset is acquired, two options are available to request. Either you claim the cost if you have acquired that from the income. So in 85% you include the cost of the fixed assets, thereby further years, subsequent years depreciation, in the same year or subsequent year depreciation, you are not entitled to. If you are not claiming the cost of the asset, the depreciation is an application. Every year you charge to income and expenditure account. To that extent, it is an application allowable. So that's what I say. So then section 11.5 versus 13.1d. So as I said, always the money shall be kept. The funds property must be as per section 11.5. Section 11.5 itself has specified certain modes like national should not, didn't say national bank, it said scheduled banks. So the Reserve Bank of India maintains a schedule that the list of banks which are controlled, supervised, managed by the RBI. So the control of RBI is there, means it's a scheduled bank. Then the monies deposited in scheduled bank are coming within section 11.5. So other than that, if you have some private banks which are not scheduled banks, if you deposit that money, sometimes not normally these people do, they go for local chits like Sri Ram chit or some other Margadarshi chit or some other chit. These chits deposit, is it, because the words used in section 1 any deposit of money, any investment or deposit. Is it an investment? Is it a deposit? So the courts held in some cases a chit subscription is not a deposit or an investment, provided not out of the surplus money, only for chit early bid sake. It is already having loans, some more money it wants. For that intention, it has subscribed to the chit. Then it is neither a deposit or investment. The word investment, the word deposit specifically are interpreted by the courts. So why do you invite such a serious thing? Avoid that controversy. That's what my suggestion. So whether it is a loan or deposit, you should debate and then finally fight with the department. Rather than that, avoid such things and always try to comply section 11.5. If you don't comply section 11.5 under section 13.1d, because section 11.5, 11 is a positive conditions, 12 is also positive conditions. Section 13 is having negative conditions. As I have shown you in my earlier slide, 13.1b, for any specific caste, color, creed, or community to apply the money, 13.1b. For specific persons, 13.3 persons, if you apply the money, 13.1c. If the money is not as per section 11.5 deposit or invested, 13.1d. So these are all violations which will disentitled for section 11 exemption. So one should be, now we're coming to the surplus. In case 85% you are not able to apply, two routes are given. What are those two routes? In the immediately following year, if you are going to apply that money, the shortfall, for example, 100 rupees income, 85 in the same year you should apply. So the remaining 15 rupees is unconditionally exempt. Whereas you spent only 78 rupees out of 100. The 7 rupees shortfall is there. That 7 rupees, if you want to apply in the immediately following year, go for the section 11.1 explanation to file form 9A electronically on or before the due date of filing of the return. So this 9A as per rule 17 has to be filed electronically. What is the advantage of this 9A? The money 7 rupees you can use for your objectives, capital expenditure, revenue expenditure, temporal expenditure. Okay. Whereas Form 10 is there, that is section 11.2. This 11.2, similar conditions, electronically to be filed. Now from 16/17 on or before the due date you should file, along with the return or on or before filing of the return you should file it. If you don't do that, majority people have not done it. Thousands have not done it. The CBTD issued 3 circulars after 2018. Many condemnation of delay application. So CBTD delegated the power to the Commissioner of Income Tax Exemptions to condone the delay in filing Form 10 or 9A. So they said electronically filing, people knew technology, might have forgotten. Physically they would have filed or they have forgotten to file electronically. So you please condone the delay with some conditions. So the genuineness, reasonableness. So 365 days now from 1819 assessment year, if the delay is not more than 365 days, like that 3 surplus 3 different conditions, assessment years for different assessment. So the period within which the Form 10 has to be filed is 5 years the accumulation. That means 1 year what is not able to be applied 85%. So within the coming 5 years, you should use that money for a specific purpose. 9A I said for your objectives, revenue or here for Form 10 for a specific purpose. Is it for revenue? Is it for specific revenue expenditure? Is it for specific capital expenditure? A hospital to buy MRI machine, to buy ambulance, a school to buy a bus, or to buy computers. Specific objective by a resolution passing, you should specify that in the form number 10, the amount and the resolution date, and then file it electronically. And form number 10 details in ITR 7 also. For early years, what is the accumulated money under this 11(2)? For how many years you have filed form 10? How much you utilized this year? How much you are carrying forward from the current year and for early years to the coming year? So these details one must be careful. So these about these things. Then because you go to decisions before that, form 10 can be filed in first appeal stage, second appeal stage. After filing the return at any time, form 10 can be filed. Those decisions are not applicable because at that time, time limit was not there in the statute. The rule was saying in the form. The rule cannot override the section. So the earlier decisions are all annulled now. The act says specifically within the time you should file means you should file within the time. So don't rely on the earlier decisions. So prior to amendment, there were decisions. So don't worry about that. So now after the amendment, all the decisions are not applicable. So now the carry forward of excess expenditure, this is not there in the ITR 7. Loan repayment is there in the ITR 7, it asks you. But in ITR 7, this amendment is not there because the number of decisions for several years consistently, I have given you 2016, 17, 18 decisions. They say in your income and expenditure account, in the immediately preceding year or in 1 or 2 years preceding, if you have excess expenditure, current year if you have surplus income, this surplus income, you can, just like your business loss carry forward, which all the CAs are experts, that earlier year excess revenue expenditure, you can offset from the current revenue income. This is the sum and substance of these decisions. For this, there is no provision in the ITR 7, but your computation claim, so that though it is not the current year expenditure, for earlier expenditure also set off can be given because based on the court decisions, consistently all the courts are giving, high courts are giving, so one has to follow it, including the Supreme Court decision in 2018. So these are all the latest things. Then 115 BBC. So if you at all you have anonymous donations, what is meant by anonymous donation? If the donor's name and address is not available, then it is a anonymous donation applicable for charitable institutions. This section from 115 BBC was there for earlier years also. From 115 BBC 15-16 assessment year onwards, the amendment is out of the aggregate donations, not the all receipts, out of the aggregate donations, either 5% or 1 lakh, whichever is higher, For example, 1 crore your gross donations, your gross receipts 10 crores, a college, but 1 crore donations are there, not corpus fund. Corpus fund donation means already donor's identity gives a letter, not that one. So the general donations are, say for example, 7 lakhs out of your general donations are 1 crore, anonymous donations are 7 lakhs. If your anonymous donations are 7 lakhs, what is 15 BC and what is the remaining thing? So this is nothing but the 1 crore general donations, 93 lakhs you have name and address, for 7 lakhs you have no name and address. So 5% of 1 crore, 5 lakhs or 1 lakh, whichever is higher. 5 lakhs is exempt. Exempt, what is meant by exemption? That's what I want to drive home my point. So the remaining out of 7 lakhs, the 2 lakhs. 2 lakhs is taxable at 30%. 2 lakhs is taxable at 30% means out of 1 crore, 2 lakhs is taxable at 30%. 98 lakhs is the now general donations, out of which forms part of your income. Out of 98 lakhs, 85 apply during that year. So that clarification only was the amendment given. Now, filing the return of income from 18-19 assessment year. In a tax audit case, if you don't file, 271 capital B, 0.5% of the turnover, some amount 1.5 lakhs, the penalty, all that is, in my view, very, very small thing. Even if you file delayed tax audit reports, nothing is going to happen. Damage is very, very little. Whereas in the case of a charitable trust, in the case of a religious trust, having full AA, if you don't file the return within the due date with the audit report electronically, you may not have necessity of filing form 10 or form 9A, because out of 100 rupees, 90 rupees you have spent, 95 rupees you have applied. Then where is the necessity of filing form 9A or 10 nowadays? So, but audit report is necessary. So, once you were having full A or 1023 approval, you have to file the return of income within the due date. If delay is there, your total exemption is forfeited. Section 11 exemption is not going to be granted to you. 1023 exemption is not going to. Then what is it? If total exemption is not there, then also net income, highest income, no. On your gross receipts, you have to pay 30% on your gross receipts without deducting any expenditure. The danger is much more. Normally, if you don't mistake me, the attitude of CS, because I have completed my 41 years of practice above the age of 65. Take some chartered musician for the sake of social respect, our temple audit. Don't give fees, sir, I do for the God's sake. But without applying these provisions, leisurely file the return after completing all his tax audit, leisurely before the end of the semester, file the return. Then the question notice, why you are not filed the audit report and the return within the time? So don't do that, don't have that charitable liberal look at these audits. Have more conscious and serious look and take the considerable fees also. So in taking the fees, don't be that charitable, because unless you take good fees, you don't do a good job. So my advice is not a specific thing, but out of my experience, because I have seen a number of demands from the CPC, and then come to, sir, is there any way out to come out of this demand? Having done a mistake, very, very costly mistake. So try to, but anyhow, condemnation of delay is there, which I am going to show you this slide. But the seriousness is from 1819 Assessment Year. Registration is necessary, filing the return is necessary, as I told you, 56 to 10. Registration is necessary. Once your gross receipts exceed 2.5, without 2.5 lakhs rupees income, what charitable activity, religious activity per annum they will do. So once it crosses 2.5 lakhs, registration is a must. So this filing the return is a must with the audit report. So in the audit report, all these columns are there. So in fact, they want to amend this form 10B last year, 2019, which was a very, very serious thing. So by God's grace, they are not amended. Had they amended this form 10B, which is 4 times more difficult than the tax audit form 3CT. So all those classes, because we have objected, they have dropped that amendment, though draft audit report is given. So be serious about this job. Trust audit, trust filing the return. This amendment, every year amendments are coming. Every year amendments are coming. Unless you are updated with these amendments and then try to comply the law, mistake will be a costly mistake. That's what I want to tell. So this I have already explained you that even government finances, substantially financed by government, they have to file the return of income from 16. No necessity of any registration, but filing the return is a must. That's what the law says. You have to file the return, even if it is managed by government, promoted by government, managed by government, owned by government. Filing of return of income is a must now. So you must be careful in giving the advice. Then other amendments from 1819, the ETG limit is a cash donation only up to 2 lakhs. It was earlier 10 lakhs. It was a without limit olden days. Limit is put for 10,000 earlier. Now it is to 2,000 rupees. Then 56 to 10. 50,000 rupees only is the basic limit for 56 to 10 application in the case of any immovable property or a cash donation. Otherwise, say the above 50,000, it attracts income, normal income computation. Then the 56 to 10 is having a subclass. Any money given by 12A registration, trust or institution, the recipient hands exempt. Any money received by a registered 12A registered institution is also exempt. who are not having that registration, then it becomes income. So like that, these amendments are also very, very important. So 269 ST is applicable for all these. Whether the student from a student to 1 year fees you have taken in 4 installments, you charged 3 lakhs rupees for medicine. So for medicine, 3 lakhs rupees fees charging in 4 installments, 757,000 you have taken. 269 ST is attracted. A temple donation it takes in single day 5 lakhs per cash received from a donor. Though it's a single receipt, 269 ST is attracted. So like that, the amendments are more important. 40A and 3 and 40A IA, I have already explained you. So these amendments, please take care. And 2019 Finance Act amendment also, violation of any other law, I have already explained you. Now for lack of time, second time I am not going to repeat the same. See that they will comply all the other laws in achieving their main objectives. And then Finance Act 2020 amendment, we are coming to close, because 15 to 20 minutes we will spare for question answers is more important. What I know, just reciting is not that important. I have to clarify your practical doubts, then only real value addition will be there. That's how I am rushing, just 2 slides only. So the Finance Act 2020 amendment, as I told you, the you can claim either 12AA or 10(c) only one, and all the existing people deemed to have been cancelled. So fresh application they should make. Fresh application so far as on this date has not been prescribed. In my mind, I am going to view that the renewal application itself is going to ask you several new questions. Have you complied the law? What is the percentage of gross receipts through bank, through cash? What is the percentage of expenditure through bank, through cash? Because several engineering colleges, including students' fees, 10%, 15% only receipt from through bank. Remaining cash received, cash salaries. Students' fees received 8 crores cash. Salaries paid 8 crores cash. So all these things they are going to ask you, in my view. So we should advise the clients to comply the law and then claim the exemption. The statute has given the exemption means try to comply the law. So try to know the law. This is 12AB, a fresh registration section. 12AA is not going to be there. So same 12AA registration and tenancy approval is now applied to ATG also. The existing ATG registrations also are deemed to have been cancelled from this new effective date. They must apply for fresh ATG registration. There also they are going to do only validity for 5 years. So like that they are going to apply. So the existing cancellation powers for violation of the provisions 12AA3, 12AA and 4 are now brought within the new section 12AB subsection 4 and 5. So if the objects are not genuine within the law and persons are not genuine, or if there is a section 13 violation, any objects deviation, then the registration can be cancelled. So even if it is given. So the condonation of delay, these are all the CBTD circulars, those who have received the demand notices for delayed filing. The audit report 10B applies to 12AA registration, 10BB audit report for 1023 registration. So by chance, if these audit reports are filed belatedly, go through the circulars, the provisions are clear. From 1920, the delay is 365 days, less than 365 days only the commissioner can grant the condonation. Otherwise, more than that, one cannot. Return filing due date from 1819, as I said, return has to be filed within the due date. If delay is there, the commissioner is given the power to condone the delay. Instead of 139.1, 139.4 within the close of that assessment year, if you file the return also, it can be condoned. So all these things are there. You please go through these decisions. And Form 10 and 9A delay. For this also, as I told you, 2018 circular, 19 circular, this 2020 January, February, condonation of delay. For this 9A and 10, number of circumstances repeatedly, the further clarifications are given, further condonation of delay power is given to the Commissioner of Income Tax Exemption. So with this, I have completed my presentation. So please, Hemant, questions we will take up now.
Yes, sir. Thank you very much, sir, for wonderful, seamless speech. So I request a few members can be taken their questions. If anybody raise their hand, I'll give you opportunity to speak directly with the speaker. If anyone to want to have their query directly, we can have a chance. I'll give them to open it. So open to the forum now. And also I'll read out the questions which already shared in the boards.
Yes, please.
I'll read out, sir.
Please.
Can I provide Mr. Chadakon and Giriji given a question? Can a private charitable and religious trust accept donation from public charitable trust? Object of both trusts are same. Tax implication in hands of both the trust under the following scenario. Can you explain?
So the question is asking the difference between a public religious trust and private religious trust. Public religious trust means public are allowed freely. Then it is a public religious trust. Whereas private religious trust means only their family members. The temple is within a particular premises. So a public religious trust incurring the expenditure, though both the people's objective is prayer to Ganesha, Lord Ganesha. Ideal, both the places are there, but a public trust cannot donate to a private trust because it is for the benefit of a private trust which is not having 12A registration. So that will not be considered as application in the hands of the donor first. In the hands of the donee, then it is becoming taxable because you said it is a private, no 12A registration it can obtain, it is a private religious trust. So a private trust in the hands of the private trust, it is a taxable income under section other sources 56(2)(10). This is the answer. Yes, sir. Next question.
CA Prabhakar Reddy is there. Sir, you can answer, unmute and you can ask your question, sir.
Sir, regarding the Residential Welfare Association, TDS, do we need to deduct it on payments made by a Residential Welfare Association when they opt mutuality concept?
You are linking to unrelated aspects. Your question says a residents association principle of mutuality will apply, 100% apply. While making the payment, TDS will apply or not. For the income, you are want to ask the question. For expenditure, you are asking for expenditure.
Expenditure, sir.
For expenditure, principle of mutuality will not apply. For income only, principle of mutuality will apply. So you are asking the question for expenditure. Then go to TDS sections. TDS sections say whether it is an assessee or not, whether it is an entity or not, any person making the payments, TDS must be complied. A railways department divisional engineer, he is not an assessee. Railways is not an assessee. There is no PAN number for railways, but even then they should obtain the TAN number and comply the TDS. So the principle of mutuality is only for income. For expenditure, just like an AOP, it has to obtain a TAN number and it must comply the TDS provisions. TDS provisions, irrespective of whether you are an assessee, whether you have taxable income, whether you are exempted income, anything, TDS provisions will apply. That is my answer, Prabhakar. Then, next question.
Satish, interest on deposits which are deposited in section 13 modes, then what is the tax liability on interest?
See, if it is a 12A approved institution, fixed deposits interest is income, not from the main objects, from incidental objects, the income is there. If it is not a 12A registered institution like the apartments association, it has deposited its money in the bank as FD, surplus money, then the banker will deduct the TDS. So that apartment association must file the return of income showing only that bank interest as income, no other income, only bank interest as income, gross income, normally subjected to MMR, maximum margin rate. Bank already has deducted 10%. Remain 20% you pay and then file ITR 5. That is the correct thing. No question of refund. So
I request Sundararajan sir to take the question.
வணக்கம் பல்குணகுமார் சார்.
வணக்கம் சுந்தரராஜன் சார், நீங்க லைன்ல வந்தாரு, உங்களை பார்த்து ரொம்ப நாள் ஆச்சு.
You can take your video also.
Yes, this is the opportunity. Hemant is asking see to face
Vanakkam, sir.
Face to face seeing, because for the past 5 months I am locked down. Normally I used to see thousands of faces. Now I am not able to see the faces. This is the opportunity. Solunga, please, please.
இப்போ you were talking about the mutuality concept as far as associations are concerned. If the associations have a space in the Motamadi and they give it to this what you call the Airtel ivalukella idu kuduthra tower kuduthuranga, they give they make money out of it. Definitely that will not be eligible for this mutuality. Yeah, it will be liable for taxation.
So for principle of mutuality, 3 cardinal principles. A, the object must be for the benefit of the members only who are the contributors. The object.
Correct.
2, the income must be from the members.
Correct.
Even if they share the income, that means, as I said, consumers cooperative society, annually surplus income by way of dividend also it can be shared to members, no problem. But if these 3 principles are applicable for principle of mutuality. If the income is from Airtel cell tower, Madi mele irkaru, avaru rent kodutaru, then for that income only is taxable. You file the return and pay the tax.
So I have to file the return. So they will deduct tax at source. That TDS will have to claim and file it off.
TDS 10% da normally. So
MMR la vandrum. Adu vandu MMR la vandrum.
So they all just like the previous question, bank FD interest, the apartment seller portion they let out for neighbors parking. Neighbors parking definitely it is a tax. Members parking no. Whereas the outsiders parking you collected some money. Then third party income principle of mutuality will not apply. It has to be treated as a normal income. And while filing the return, the mistake whatever people do, along with that other income, regular income also they add in this. The regular income is not income under the Income Tax Act. No need to show that income or treat it as income. Only the third party income you please show and then file the return. That is sufficient.
The other question which I have already put on chat, if interest on deposits is also coming as other income nu solla. So there are education institutions like medical college etc., which they are supposed to place some deposit for the purpose of maintaining guarantee. Okay, they have to give a guarantee to DCA, MCA etc. For that I am making a deposit. That deposit also will be considered as other source only for Form 7 or it will.
When you are going for ITR 7, you are having already Section 11 exemption or 10(c) exemption.
Correct.
For them, the ITR 7 contains the heads income also. For your information, just like ITR 5, ITR 7 is also having house property income, business or professional income, source income. But once you are coming to compute your income under Section 11, no question of other source income, no question of house property income. It comes in normal income only.
But we'll have to fill it in the respective columns, that's all.
No, don't fill in other source income. You fill in the ITR 7, you are having normal regular income for
charitable activities.
Objectives, income for main objectives and other objectives. So the other income you take not other source income. The other income only is there. There is a specific column in the ITR 7. It is not other source income. Don't fill up in the other source income, please.
Okay.
So the main objects income and other income only, please.
Okay.
Thank you, sir. Nandri, sir.
Thank you.
And I request Mohanji to unmute and speak. Mohan, you raise
Yeah, thank you, Hemant. Can I unmute my video also?
Video also you can go ahead, sir. Unmute your video also.
Yeah, it's not going. Yeah, now it is coming. Falgun Kumar sir, very, very nice presentation. And I was actually heard you about 10 years back when you spoke to me, when you spoke in the institute about the same subject, about the trust and all. And especially I think at that time you also presented for the HUF and all that. So it was an excellent presentation. And today also I think you have done an excellent job. And we have a very, very relevant question. We have some Telugu associations here in Chennai, where we do only about 3-4 functions like Ramanavami, Ugadi celebrations, and Vanabhojanalu. So like this, we only collect from the, of course, we also collect some donations from outsiders. We collect from regular donations from the members and then spend it for the various functions. So Another thing is we have almost about 800, 900 members here. And how do we actually have to list out all those members? Because I've been filling it up only the executive members in the AOP. Because we don't have ATG, we don't have 12AA registration also. Because these are all mostly spent only for that purpose. Once in 2 years or 3 years, we have a souvenir for which we get advertisement collection and all that. But most of the time, it is spent for the various functions, because every function costs about 2-3 lakhs and all that. So whatever the little collections which we get, we almost spend about it. But in one particular year, what happens is before March, if the functions, both the functions come together before March, the next year there will not be any expenditure. So that is where we are getting a trouble. And I am actually filling it up only for the executive members as the members, and then putting others as the balance 100% and all that, and presenting it. Every year they are raising demand on the donations and whatever the other collection. The difference income over expenditure. Every year they are demanding for the tax. We went and then explained to the officers, sir, there is nothing here. Actually, it is only a mutual association. At the same time, very little income and all that. They said, okay, they will. We will look into it. But nothing happens.
You have not filed the appeal?
We have not filed the appeal, but it's a very small amount. The problem is about 60,000-70,000 rupees. For that, again, going to the appeal and all that, because every 2 years, executive members also will change and all that. So that is one of the reasons. And in one or two cases, only once in 3 years or 4 years, we get this particular cycle where income will be more than this thing, but otherwise it will not be there. So that is the reason we went and approached. They said, okay, we'll correct it and all that, but nothing is happening.
Now your question is very clear. For all the other members' sake, in Chennai, there is a plastic manufacturers association.
Okay.
So there are a number of manufacturers, around 400 to 500 minimum plastic articles manufacturers. They formed into an association. Once in 5 years, they get one exhibition. So this time in Bombay, this time next time in Calcutta, next time in Delhi, and once in 5 years they get their turn to have their exhibition, plastic manufacturers products and the machinery exhibition. So in that once in 5 years they will have huge receipts, and then other years very, very normal receipts. Now the basic fundamental principle, the 3 mistakes what you have done, I am trying to explain for the benefit of members. Yours is for members' sake formed association. You are saying, sir, for members meeting only. Benefit is for members. You are saying this Kartika Bhojan. Panabhojanalu. So like that, you only for members, they can come and have a get together, social get together. So once you are a social get together thing, why you have shown all your members fees, members that dinner subscription as income, unless you have shown it in your return and the income, how the officer will come to know of it? So you have finalized your accounts, that is normal accounting principles, 100% true and fair, but while filing the return of this principle of mutuality, you should not show the collection from members as income and expenditure also to the members. You remove it, remaining only you file. That is the law. That is the law. Because you have filed your gross receipts, and the gross receipts you will dissolve something, and net income I am taxing. Though you have 12A, actually you are not.
We don't have 12A, sir. We don't have 12A.
You cannot have also, sir, because if your object say I am serving for the public, 12A you can apply and get it. Your object is only for the members, then 12A they cannot give. Even if you apply, you should not apply. They cannot give. So the remaining income, like you are saying, advertisement in once in 2 years. Sir, that before receiving the advertisement, you make that advertisement giving man as your member. In your bylaws, who can be a member? So and so can pay 100 rupees, 1000 rupees. First you take 1000 rupees as member and then take advertisement subscription from him. So it becomes a member's subscription.
Mostly it would be also, and only very few will be from others.
Wow. So that member's subscription is not an income. You need not report as income in the income tax return filling up. Then the officer, there is no possibility for him to tax. Even if it is through check, in the bank account, he will ask you, in our bank account, you are having 20 lakhs receipts. You have shown only 2 lakhs as income. Yes, sir, 18 lakhs is from members. Principle of mutuality will apply. So I have not shown. You give in writing. That is the law. Because you are given 20 lakhs, that fellow is, because without 12A, he is now taxing the remaining thing. So this is how the practical.
Thank you very much. And we'll take one last question from Chartered Accountant Suresh Ranganathan sir. One society has merged with another society with a similar objective on 1st February 20. After 1st October 20, whether the application of renewal is to be made for the continuing society only. What happened to the merging society income tax registration under section 12AA?
So the amalgamating, merging and merging society, merged society, two societies are there. Both are having 12AA. Now the merging society disappears from 1/4/20. From 1/4/20, if it is not existing, no necessity for applying for renewal. So the continuing society, the merged society must apply for renewal also. But before winding up, they should take all the proper precautions not to fall within the clutches of section 115 TD, as I have shown in my PPT. When you are merging similar objectives, condition, you may have both hospital and education as in the receiver's hand, whereas in the donor's hands, only education. So your education purpose land building, you have transferred along with the government licenses, government permissions. For example, engineering college, you should take the university affiliation, no objection certificate. You should take the state government, no objection certificate. Finally, you should take AICTE, no objection certificate. Then only you can transfer one engineering college from one society to another society. Comply all these things. These are all the questions going to be asked by the commissioner. With my practical experience, I am sharing you. So the donors society, on February 1st, it has donated. By March 31st, for 2021, you file the return, audit report, and then don't apply for renewal. Renewal is only for 21-22 assessment year. For 21-22, no assets, no income, no bank account. Why you worry? By 2021 assessment year, you are having. By February 20 itself, you have given the assets. So the donee should continue to get the renewal. Donor need not apply for renewal. This is the answer.
So thank you very much, sir, for wonderful and detailed speech on that. Before giving word of thanks by my deputy convener opening that, last question: has the department come out with the forms for the fresh registration or renewal under section 12AB?
Yes, for the new section, they have not yet released the forms. So they may, because the due date is October 1st. So government is with many other problems. So still time is there. So after they giving the specified form for, because under 12AA, form 10A is there. Maybe a new form they have to, because so many questions, the renewal process, why they have come in some permanent registration, why 5 years renewal, why 3 years provisional registration, the system should take care of itself. So they want to ensure genuine people should not suffer, and those people who are violating, automatically system should put a check for them. That's why once in 5 years renewal they have said. So the renewal form going to be more stringent, maybe asking for more details. We should wait and see. So far they have not prescribed. This
so this is the time. Thank you very much, sir. This is the time for the vote of thanks. I request my deputy convener to take the charge.
Before vote of thanks, my thanks. I got all this knowledge because of several CAs, right from my student days, PPG, Gururaj Upadhyaya, to all my seniors, right from Bhupati sir, or say Chen Manoharan sir, or several CAs have sacrificed their valuable time to teach, to educate the practicing CAs. For all of them, I must say in every meeting, my thanks, because I am, what I could deliver now means because several CAs have sacrificed. For them, I convey my thanks, and now it is for the organizers to propose. Please.
My deputy convener, sir.
Good evening, friends. This has been a wonderful evening where a very, very difficult subject has been handled very superbly by Sri Palgun Kumar. And now I think many of the doubts have been clarified by him. And we will remain thankful for his excellent presentation. And we would request him to help us in future also to educate all our members. Thanks a lot, sir.
Thank you. Thank you.
So thank you very much, sir. On behalf of Anna Nagar CP Study Circle, on behalf of our convener, co-convener, apart from that, all our members from bottom of our hearts, thank you very much for your valuable time. And despite you have a trouble in the technical problem, and despite that, and the golden feet of Lord Balaji are there, all your blessings for us required. And thank you very much. Have a nice day.
Very good.
Thank you all, and catch you in the next meeting.
And Sri Palgun Kumar is our representative in Tirupati, sir. Most of us are unable to visit Tirupati now. Thanks to the lockdown. Kindly pray for us also.
Yes, sir.
Thank you. Thank you, sir.
Thank you.
Thank you as well, Swamina.
Very
Thank you
kind
very
of-
much.
Very kind of. Very kind of.